What if I told you that the single biggest barrier to buying a home in the last 2 years is finally starting to crumble? Because right now, US mortgage rates have dropped to around 6.15%, their lowest level in over a year. And that one number could change everything for you in 2026. For millions of Americans who felt completely priced out of the market, this is the news they've been desperately waiting for. But does this dip mean you should rush out and buy a home right now? Or is this just a temporary blip before things get crazy again? We're going to break it all down, look at the real numbers, and figure out if 2026 is truly your year to become a homeowner. First, let's do a quick refresher so we're all on the same page. What exactly is a mortgage rate? Simply put, it's the interest rate you pay on the loan you take out to buy a house. And the king of all mortgage rates, the one that 90% of American homebuyers care about, is the 30-year fixed-rate mortgage. It's the gold standard because it locks in your interest rate for the entire 30-year life of the loan. That means your principal and interest payment will never change, giving you stability and predictability, which is exactly what you want when you're making the biggest purchase of your life. When this rate goes up, buying a home becomes more expensive. When it goes down, like it is now, homes become more affordable. So the big question is, why are rates falling all of a sudden? After climbing to agonizing highs above 8%, this drop to 6.15% feels like a miracle. But it's not magic, it's economics. The first major reason is cooling inflation. You felt it at the grocery store, at the gas pump. Prices for everything went haywire. For the last couple of years, the Federal Reserve's #1 mission has been to fight that inflation by raising interest rates, which made borrowing money more expensive for everyone, including for mortgages. But now, we're finally seeing inflation slow down and get closer to the Fed's 2% target. As the inflation monster gets put back in its cage, the pressure to keep rates high is easing. This leads directly to the second reason: the Federal Reserve's interest rate policy. Think of the Fed as the captain of the US economy. When inflation is high, they raise their main interest rate, the federal funds rate, to slow things down. But now that inflation is cooling, the market is betting that the Fed's next move won't be to raise rates, but to start cutting them. This brings us to a crucial point. Mortgage rates don't actually wait for the Fed to act. They are forward-looking. They move based on what investors think the Fed is going to do in the future. This is where something called the 10-year Treasury yield comes in. You don't need to be a Wall Street trader to understand this, I promise. Just think of the 10-year Treasury as the benchmark for all long-term loans, including mortgages. When investors are optimistic about the economy and expect the Fed to cut rates, they buy up these Treasury bonds, which pushes their yield down, and almost in lockstep, mortgage rates follow. So the falling 10-year Treasury yield is a direct signal that the market is predicting lower interest rates ahead, and that's pulling mortgage rates down with it right now. Okay, let's move away from the theory and talk about what this means for your actual bank account. How much does a drop from, say, 7.5% to 6.15% really matter? Let's run the numbers. Imagine you're buying a $400,000 home with a 20% down payment, but the real shock comes when you look at the long-term interest savings. Over the 30-year life of the loan, that lower rate will save you a staggering $102,240 in interest payments. That is a life-changing amount of money. This is the power of a lower mortgage rate. It doesn't just lower your monthly bill, it dramatically improves your overall affordability and financial health for decades to come. Suddenly, a home that was completely out of reach a few months ago might now fit comfortably within your budget. So, who stands to benefit the most from this new environment? First and foremost, first-time homebuyers. This group has been hit the hardest by high rates and high prices. A lower rate means a lower monthly payment, which makes it easier to qualify for a loan and finally get your foot in the door of homeownership. The second group is current homeowners who are looking to refinance. If you bought a home in the last 2 years and are stuck with a rate above 7%, this drop is your signal to start watching the market. Refinancing from 7.5% down to 6.15% could free up hundreds of dollars a month. And finally, real estate investors. For them, it's all about cash flow. Lower borrowing costs mean their rental properties are more likely to be profitable from day one, which could spur more investment in the market. This all leads us to the million-dollar question, the one you're probably yelling at your screen right now. Should you buy a home now, or should you wait? Let's look at both sides. The biggest pro of buying now is locking in a home at today's prices with a much more manageable interest rate than we've seen in years. You get the benefit of improved affordability and can start building equity immediately. And remember the old saying in real estate, marry the house, date the rate. If rates fall even further in the future, you can always refinance. You can't, however, go back in time and buy your dream house at today's price. But there are also risks to waiting. The main argument for waiting is the hope that mortgage rates will fall even further, maybe even into the 5% range. If that happens, you could save even more money. However, the risk is that you're trying to time the market, which is notoriously difficult, if not impossible. What happens if rates don't fall much further, or even start to creep back up? You could miss this window of opportunity. More importantly, what do you think happens when thousands of other buyers who have been sitting on the sidelines see these lower rates? They jump back into the market. And that brings us to the topic of housing prices and competition. As mortgage rates fall, more buyers can afford to buy. More buyers means more competition. More competition for a limited supply of homes inevitably leads to bidding wars and drives prices up. So, the danger of waiting for the perfect rate is that by the time it arrives, home prices may have risen so much that you're no better off. You might get a lower rate, but on a more expensive house, potentially wiping out any savings. We're already seeing signs of this, with buyer activity picking up in markets across the country. The spring 2026 buying season could be far more competitive than what we've seen recently. Now, what do the experts think will happen next? Looking ahead to the rest of 2026, the general consensus among economists is that we'll see stabilization, not a crash. Most forecasts predict that mortgage rates will likely hover in the high 5% to low 6% range. The days of 3% rates from the pandemic era are gone, and they are not coming back anytime soon. The economy is fundamentally different now. So, the expectation is for a more balanced, sustainable housing market, one where rates are manageable but not artificially low. This is likely the new normal for the foreseeable future. So, we come full circle. Mortgage rates are at their lowest point in over a year, making home ownership more affordable than it's been in a long time. But this has also woken up a sleeping giant, a wave of potential buyers who are tired of waiting. This is a moment of opportunity, but it's also a moment that requires a clear strategy. Rushing in without a plan is just as risky as waiting on the sidelines for a perfection that may never come. The key is to know your numbers, understand your local market, and be ready to act when the right property comes along. The best time to buy is when it's right for you. But for the first time in a while, the market is finally giving you a chance to make that decision. Now I want to hear from you. With rates at 6.15% and competition heating up, what's your move? Are you jumping into the market now, or are you waiting to see if rates will fall even further? Let me know in the comments below. And if you got any value out of this video, make sure to hit that like button and subscribe for more content to help you navigate the world of real estate and finance. Thanks for watching, and I'll see you in the next video.